Good afternoon, everyone. I hope you're all doing well today. It's a beautiful sunny day here in Eastern Canada, in Atlantic Canada. It's beautiful here, so I hope you're all having a great day. I'm going to continue on with the reading of the Financial Matrix. I finished up all the chapters, and there's 3 appendices left. And I want to read those because they're extremely interesting and gives a little more detail that you can relate to everything that was said in the book. I'd encourage you to go back and go to my affiliate with Callie YouTube channel. I've posted all of the videos there from the book. All right, so this appendix number 1, I'm going to start reading. The title of it is, What is Fractional Reserve Banking? The government-sponsored Fractional Reserve Banking, FRB, system allows banks, in partnership with the central banks, to create the majority of society's money, debt money, out of thin air. Unbelievably, the FRB system permits the banks to create fiat debt money out of thin air, but forces borrowers to pay it back through the sweat equity of real production. It's as if the banks have been given a license to make fool's gold and act like it's real gold. Further, the banks create the fool's gold, the fake FRB digitized debt, to loan to people who must pay back the loans plus interest with real gold, actual production. FRB, the Fractional Reserve Bank, in sum, permits banks to create fool's gold to control the fools. You'll see coming up on the screen, there's a chart that says the expansion of $100 through fractional reserve banking with varying reserve requirements, accumulation of deposits. I think there's some blank screens happening with this little slideshow that I put together, but anyway, just be patient though. They'll work their way through. So the Federal Reserve basically creates money out of thin air. All right, and you'll see that when the chart comes up, how you can take $100 and turn it into almost $1,000 through the fractional reserve banking system. So the fractional reserve banking system is a secret to the financial matrix because the ignorance of the masses around creation of debt money is the key to its control and why the latest matrix is the most effective one ever. For instance, the financial matrix constantly promotes home ownership because it feeds the growth in the money supply by attaching it to the masses' dreams of home ownership. In fact, approximately 2/3 of all U.S. debt money is created through home mortgages acquired by people seeking to live the American dream, and that's in quotations, by owning, and the word owning is also in quotations, by owning a house. Since 1950, alarmingly, the financial matrix has gutted home equity percentages, and your home equity percentages are the amount of value remaining after subtracting all mortgage amounts owed. And that's decreasing the equity from over 80% in the early 1950s to just over 30% today. This is nearly a 50% reduction in home equity siphoned out of the USA's $25 trillion housing market. This amounts to around $12.5 trillion, more than U.S. national debt until a few years ago. $12.5 trillion of real asset value lost by U.S. citizens and gained by the financial matrix. And a similar financial storyline is occurring in all civilized nations. Fractional reserve banking, FRB, is a process whereby a bank takes the deposits into the bank and then reserves a portion of them, usually between 5 and 20%, depending upon the laws that govern it, and then loans out the rest. In this scenario, if every person who deposited money were to ask for it back, they would not all be able to get it because the bank has loaned out their money while allegedly still having it available for their use. But how can money be loaned out and still available to the depositor at the same time? The funds cannot be owned by both parties at the same time. With an actual loan, the lender understands he or she does not have control over the money until the debtor's due date, but in fractional reserve banking, it does not work that way. Mysteriously, through the fraudulent fractional reserve banking system, the bank maintains a depositor's access to savings while also loaning the funds out to others. The problem, of course, is the FRB system inflates the money supply. How much so depends upon the reserve ratio chosen. By giving two people, both the depositor and the lender, access to the same money. Indeed, through the use of FRB fiat money, and fiat money is money not backed by gold or silver, so indeed, through the use of FRB fiat money, the elites have flooded the marketplace with FRB money, causing rapid inflation and rampant injustice. The financial matrix was birthed through a web of fractional reserve banking, increasing national debts, and increasing taxes. Moreover, the crony capitalistic fractional reserve banking system sets the interest rates, which have created the boom-bust cycle plaguing modern society. Imagine playing a game of musical chairs where the same chair is fraudulently issued to 10 different people without their knowledge. While the music is playing during the boom phase, everyone is happy and the economy appears to be growing rapidly. However, as debt increases, so too do the prices of everything caused by the predictable inflation. Eventually, the prices of houses, cars, and other big ticket items outrun the ability of the consumers to service the debt, and the music stops abruptly. The boom period is now transformed into the bust phase as the highly unstable and inflated money supply bursts because the consumers cannot afford to pay the interest and principal payments on their bloated debt. Not surprisingly, when the music stops, the consumers discover they do not have actual chairs, which the actual chairs are like real commodity money, to sit down in. And real commodity money would be gold, silver, or some valuable asset that would back that money. So when the music stops, consumers discover they do not have actual chairs to sit down in. Thus, the weakest financially crash to the ground first, but it doesn't stop there. The failure of the bank's marginal loan qualifiers cause a cascading effect. I would say like a row of falling dominoes, but I don't want to mix my metaphors. So anyway, let me just read that again. The failure of the bank's marginal loan qualifiers cause a cascading effect until only the most conservative financially can survive at all during the bust. And to add insult to injury, once a fractional reserve banking system fosters a predictable boom-bust cycle, the boom is credited to the ingenious money controllers while the bust is blamed on free markets. Apparently, it's a loaded game of heads and tails, where heads means the elites win and tails means the masses lose. Although economists, the caliber of Ricardo, Mises, and von Hayek, have insisted the fractional reserve banking system is fraudulent and unstable, it survives through the masses' ignorance and the elites' support. Perhaps British monetary reformer Michael Rowbotham described the fraudulent nature of the FRB system the best when he wrote, "The creation and supply of money is now left almost entirely to banks and other lending institutions. Most people imagine that if they borrow from a bank, they are borrowing other people's money. In fact, when banks and building societies make a loan, they create new money. Money loaned by a bank is not a loan of pre-existent money. Money loaned by a bank is additional money created. The stream of money generated by people, business, and governments constantly borrowing from banks and other lending institutions is relied upon to supply the economy as a whole. Thus, the supply of money depends upon people going into debt, and the level of debt within an economy is no more than a measure of the amount of money that has been created. In effect, today's financial matrix relies upon millions of people willingly selling themselves into financial slavery. For when one combines artificially low, centrally controlled interest rates with the fractional reserve banking system, one has an enticing combination for consumers and entrepreneurs to borrow money into existence. This money creation, however, leads to inflation, which means literally an increase in the money supply. This predictably results in a boom and eventually a bust when inflation raises prices, which always rise as a result of an increased money supply. Sorry about that, folks. This predictably results in a boom and eventually bust when inflation raises prices above a manageable level. At that point, the consumers and entrepreneurs default on the loans they can no longer service, and the bust wipes out value throughout society. These conditions occurred twice during the Greenspan-controlled central banking era, the period time in which Alan Greenspan was the chairman of the Federal Reserve Banking System, the institution that sets interest rates, among other things. In both cases, the artificially controlled low interest rates fueled consumers' appetites for speculation and easy profits. The internet bubble increased the NASDAQ nearly by a factor of 5 during the boom between 1995 and 2000, but it then proceeded to collapse by over 60% from 2000 to 2001. Unfortunately, those who control the money supply seem to be perpetual optimists who go from failure to failure without learning anything. As a result, when the Twin Towers came crashing down in 2001, Greenspan repeated the same policy that had caused the previous boom-bust cycle. This time, however, money poured into the housing markets and prices shot up some 50% in just a few short years. Not shockingly, the mortgage companies sought to maximize profits by helping everyone qualify for a home mortgage, even those who didn't have steady jobs. The increase in mortgages exploded the money supply, which further fueled higher priced houses and mortgages. The housing bubble was blowing up. Predictably, however, when the non-qualified borrowers could not make their mortgage payments, the housing bubble and the money supply both collapsed, and the financial house of cards would have followed them had it not been for government bailouts. My good friends and co-founders of Life, George and Jill Gazzardo, experienced the 2008 boom-bust cycle firsthand. They purchased prime real estate in Tucson, Arizona for over $1 million. They put more than 20% down and intended to pay the rest over 5 years. However, the bust collapsed the real estate market and the land wasn't worth half of its former price. The Gazzardos ended up selling the property and still owing $600,000 for land they no longer owned. Thankfully, the Gazzardos were equipped by building a huge business asset to weather the storm and learn valuable fractional reserve banking lessons. Unfortunately, most others cannot afford these financial lessons. Indeed, for many people, the purchase of their dream home resulted in bankruptcy when the housing market deflated. While practically everyone makes money during the boom, most end up losing everything in the bust. Unbelievably, however, when the negative effects of the boom-bust cycle hit, the main group the government protects is the fractional reserve banking system that created the issue in the first place. In other words, the fractional reserve banks reap profit during the boom and secure protection during the bust. Fractional reserve banking, in sum, is a key aspect for profits and control in the financial matrix because it is government-sponsored activity that allows bankers to make low-interest loans to the government and the people without actually having the money to do so. Loans are created out of thin air as mere digits on a computer screen. However, the productive entrepreneurs and workers must pay back these loans with real production dollars. The financial matrix is so ubiquitous because it provides fake loans to be paid back with interest from real money earned from real production. In my opinion, the best long-term strategy against fractional reserve banking and the financial matrix is for Americans to educate themselves on a concept called privatized banking. This thought process gives individuals and business owners an alternative financial institution to utilize for their cash flow and a better temporary headquarters to store their safe liquid cash until needed. In this supercharged savings account, you still retain liquidity, use, and total control of your money, and a dramatically higher rate of return, along with numerous other benefits not found at commercial banks. Most importantly, this financial institution cannot inflate the money supply from your deposits and enslave future generations by creating money out of thin air. When enough households engage in the process of privatized banking, the power of banks to multiply the money supply will be dramatically reduced, and the financial matrix will eventually collapse. All right, so that's the end of Appendix 1, but that is some really good information there on how exactly fractional reserve banking has been siphoning off the wealth of the Western world. I know from when I worked in the bank, when he talked here about loans, and so the money that's loaned to you is created out of thin air, and then you have to pay it back. You actually have to work and earn that money, spend many hours, much effort to actually earn money to pay back that magical money. Really, when you think about it, it is criminal. Now, he mentioned here about privatized banking. We don't have that in Canada. I know you have different banking rules in the US. The closest we can come to that is like our credit unions here in Canada. I don't know if that will change anytime soon, but it certainly is desperately needed here. And from working in the bank and just knowing firsthand from talking to thousands of people over the time that I worked there, most people, when they borrow money, they have absolutely no idea where that money comes from. The majority of people in the world, I would say, who borrow money from a bank, from a financial institution, have no idea that that money is not backed up by deposits. We all are taught in school that people put money in the bank for safekeeping. They earn their paycheck and then they put it in the bank and the bank will pay them interest. And then the money that you're not using gets loaned out to other people. And then people pay back some interest on that. And that's where the interest that you earn on your deposit comes from. And that's where the bank earns their interest. False. That's blatantly false. There's such a small percentage of your deposits that is actually backing any loans. Usually it is between 5 and 20%, depending on what your state or your province is. Here in Canada, across the country, I do believe it's 10%. I could be wrong. You can certainly correct me on that in the comment section. But it's across the board here. It's the same percentage that all the banks here have to keep on hand for deposits. However, when you think about it, this is why it's so important to get out of debt, to not participate in that debt system, because you're working many long hours to pay the banks back fictional money. Like, this is not money that was in the system originally. So you're paying them back this fictional money, and you're also paying them back interest on the fictional money. And when you think about it, that's actually insane. So if you're a younger person and you haven't gotten yourself in debt yet, you're thinking about maybe going to college or university, do whatever you think you need to do for your education. There's a lot better ways, I think, especially in the age of the internet, many more ways to get educated on the things you want to be educated on without going into huge amounts of debt. I would suggest any young person to go out and work through high school and save every dime you can save, and put it into purchasing land. Land is a real asset that no matter what happens with the financial system, whether it's a boom or a bust cycle, you're going to have the land to fall back on. You can live on it. You can build a homestead on it. You can earn income from it. And it doesn't dissolve into thin air like fiat currency does. And then if you do decide you want to go to college or university, then you actually have an asset that you could sell to pay for your education, rather than going into debt and paying the banks thousands of dollars in interest and becoming a slave to a bank. Work diligently while you don't really have any living expenses, because I'm sure your parents, if you get a good life plan, a good financial plan, a good asset management plan together while you're in high school and you start working towards that, your parents will be ecstatic to support you through your high school education, and you're working without expecting you to pay any bills. Myself, for my children, while they were in high school, the money they had, our rule was you have to save 50%. You can spend the other 50%, but you have to save 50%. And if you don't save 50%, then you're going to have to start kicking in and buying your own groceries, paying for your own clothes, that sort of thing. And so they ended up saving pretty darn good when they were in high school. And if they wanted to spend the money, they usually came and got my advice or talked to me about, Mom, I'd like to buy this or I'd like to buy that, but I have to use some of my savings. And so we had lots of good conversations about the pros and cons of using their savings for whatever it was they wanted to buy. So I wish at that time I had known more about the Federal Reserve. Working in the bank, you really don't know anything about the Federal Reserve unless you educate yourself. The story that you get when you're working in the bank is that the bank borrows money from the Federal Reserve, and that's the money that they lend out. Well, that isn't quite so. So anyway, I hope you got some value out of that. Tomorrow or tonight, I think tonight I'm going to do another. Appendix number 2 is, what are the 3 historical matrices of control? And that's really, that's extremely interesting, actually. And it kind of dovetails right into this fractional reserve banking, because fractional reserve banking, controlling the monetary system, is one of these matrices of control. All right, so that's it for this afternoon. I hope you got some value out of it. And as usual, if you want to support this channel, you can go to www.healthyandwell.ca. That's my website, and I have a donate button there. And you can also make comments on the website about any of the videos that I'm doing here. And as well, my YouTube channel is Affiliate with Callie, Affiliate with Callie, AFFILLIATE with Callie, CALLIE. All right, so that's it for today. We'll see you later. Peace out.